Alright, what's up guys? It's Mark here at Dow Trading. So I'm putting together this short video to illustrate to you guys how easy it is for retail traders to get suckered into the market. Alright? There's a couple of lessons to be learned in today's price action from today, December 3rd, which was a Monday. And the main lesson that I think is to be learned is that never listen to the headlines. Don't be a foolish retail trader. Try to take a professional approach to your trading, which is really don't trade with emotion. And of course, the number one rule that you should follow, always respect price action. All right? Because over the weekend, we got this bullshit news that Donald Trump has struck a deal with China, right? That's all people were talking about all weekend, right? And these are the main websites that I think a lot of retail traders pay attention to. Like here's CNBC, check out the main headline, US-China trade truce, right? If I go to CNBC, again, check out the headline, stocks and oil jump after the US and China reach a trade truce. We go to Bloomberg.com, my personal favorite, I love Bloomberg. Check out this headline, Chinese stocks rally after Trump and President Xi agreement, right? So basically, if you're reading the news over the weekend, you're thinking, holy shit, Monday is going to be a great day to go long the market. And in reality, if you were trading today, you knew exactly what happened. All right? So if we go to our charts, our 5-minute candlestick bullshit charts, and we hit it with the Dynabars filter to make it look like this, right? We got one short signal pretty much all fucking day today. All right? And this thing printed at 5:47 a.m. Chicago time. Right? So what do I tell you guys to do? I tell you to pay attention to this zone, the high and the low. Look for a nice retracement. Do you see any retracement into that area? How about right there? Okay? If I put my timestamp on it, I'll show you guys what time that retracement happened. You can see 8:47. Check out my x-axis. 8:47 a.m. Chicago time. All right? This is all real. I'm not cherry picking anything here. This is real fucking trading that professional traders do every day. All right? We're not looking at shit like this. Right? This is for retail traders. And I'm telling you, I was watching my accounts, I was checking Facebook, I was checking all this stuff. Everybody is talking about markets going up. Markets are going to skyrocket. It's time to go long. It's time to buy. Right? Just a bunch of fucking douchebags. Right? What was the chart telling you? That's all I give a shit about. Right? Why do I sound like I'm so angry right now? I'm really not. This is just the way I talk. I was pretty annoyed at all these morons who were talking about buying the market today, but I'm not mad, just annoyed. Anyway, what's my point here? Well, here's my point. All right, my point is ignore the headlines. In fact, when you're trading, don't even look at the news. Just put on some music, put your headphones on, and wait for these signals. Right? You're going to get these signals every single day. Here was a long signal, right there. There was the retracement. You're done. Now that happened Sunday night, about 5 p.m. You probably weren't at your computer. But I know you were at your computer at 8:47 a.m. Chicago time, right over here. I know you were. Right? So when I go back to these headlines and it talks about, you know, the market jumping, well, what did the price action look like for day traders like us, right? All this says to me is I'm looking to go short and I'm looking to stay short. Fuck what the media says, all right? So the lesson here is, guys, trade the signals, don't trade the headline. Thanks for watching this video. See you on the next trade.